Good morning, everybody, and welcome to the August 5th, 2024 edition of the Premarket Prep session. I'm your host, Adam Holland, stock options expert market strategist. And we're here to go over and lay out the expectations slash game plan for this week. The second half of 2024 has continued to mount crazy event after crazy event, and we saw even more volatility here over the weekend with the stock market in Japan just becoming a dumpster fire and that kind of spreading. So we'll see. Again, we want to it's nap time. You might hear some barking in the background, but we've got to roll with it. We're in crate training season for puppy. Um, but I hope everybody had a great weekend, right? And hopefully she, kind of gets together and we can keep it pushing. Um, Good morning, Paul. Good morning, Tage. Good morning, Alicia. Good morning, Queen Gatlin. Right. Good morning. Good morning. Glad to have everybody here. And let's try and make some sense of what went down, as well as parse through the economic calendar for this week. Right. Last week was crazy. We had a ton of different data coming out. We had a Fed, FOMC meeting. We had the Powell press conference. So we had a lot that was going on, and it lived up to the expectations of what we anticipated. Right. It was going to be a crazy week, and it was exactly that. So let's see what we got going on in the week ahead this week, as well as our Monday specific news. And yes, there will likely be background barking because, like I said, we're in the midst of crate training season. So our top news here: Wall Street is cautious heading into next week after having seen the tech-heavy Nasdaq. This is the week ahead news, right? And then we're going to dive into our Monday specific news. So, as the tech-heavy Nasdaq slid into correction territory, the market narrative has changed in a matter of days. Ooh, excuse me. And concerns now abound that the Federal Reserve has slowed down the economy too much and has not eased policy soon enough. The latest non-farm payrolls report has stoked recession worries, and investors will be paying close attention to upcoming economic data. Monday, we'll see measures on the U.S. services sector, where attention will be on the employment and prices components. There will also be the Fed's senior loan officer opinion survey to give the latest read on credit conditions in the economy. Then finally, we get updated jobless claims on Thursday, which got a ton of attention. Yeah, I'm sorry, it's a bark fest in the background. Let's see. The second quarter earnings season will ease up somewhat, though there will still be reports from hundreds of notable names, including the theme park and entertainment giant Disney, ticker DIS, construction equipment behemoth Caterpillar, which has been pushing here. Meat processing major Tyson Foods, and then ride hailing leader Uber, and vacation rental firm Airbnb. Um, Monday, we see measures on the U.S. services sector where attention will be on the employment and prices components. There will also be Fed senior loan officer opinion survey to give the latest read on credit conditions in the economy. Um, yeah, so it looks like we get last Thursday we got some data, but this Thursday we get initial jobless claims. Um, and that will be something that we have to keep an eye on a little bit because of the jobs report that we got last week, right? Employment hadn't been a sector or anything that was really affecting things for a while, but as of last week, right, that finally changed. So now it's something that we have to, kind of bring back to the forefront and pay more attention to. We used to, have to keep a close eye on the employment data, and whatever data came out, it really affected how the market moved. And then that wasn't the case for a while. Employment data took a back seat, but now since it's starting to show that the labor market is having some cracks in it, and employment is weakening, it's having effects, right, to the tune of the sell off that we saw last week. So there are a lot of balls in the air, a lot of data that is being dropped, a lot of things that are happening. So again, only thing you can do is focus on controlling what you can control moving forward, right? Which is going to be your mindset, the system, right? How much risk you have on the table. Really, really making sure that you tend to the little things. Put pride aside, right? Put ego aside. Put everything aside, right? Slothfulness, laziness, all of that has to get put to the side if you wish to succeed. If you don't, and you're fine with the dragon eating its tail and you going through this boom and bust where you deal with the same issues, then you will continue to go through that cycle, right? But it's a cycle that we want to break, and for the sake of moving forward, we only get every day once. So you don't want to waste it. Let's continue to get better, get 1% better, 5%, 10% better, even dare I say. Um, and keep it pushing. But it's times like these that really expose who you are, where your shortcomings are, and you either rise to the occasion or you choose to continue to be, a victim of your own devices, right? So now is when you really look down and you say, okay, I want to rise, right? I want to rise. I want to win. I know what I want, and I'm willing to give up anything that I need to in order to get there. And part of that is probably yourself, right? The old you has to die for the new you to live. So let go of the old you, right? And let go of what's connecting you to them. And you'll find it a lot easier in order to do what you need to do to rise and accomplish what you need to accomplish. August 5th, in terms of earnings this week, we've got CSX, William Companies, Tyson Food, Carlisle Group. Nobody's super big. Tuesday, we've got Amgen, Caterpillar, Uber, Airbnb, Duke Energy, Celsius Holdings, and Yum Brands. Wednesday, we have Disney, McKesson, CVS Health, Hilton Worldwide, Shopify, and Fastly. And then Thursday, we've got Eli Lilly, Gilead Sciences, Expedia, Take-Two Interactive, Paramount Global, and Datadog. So some interesting names this week. Obviously, nowhere near as big as the names we got last week. That's why last week was such a big blockbuster week, right? Because we had so many names reporting, so much data dropping. So it's nice that we can, kind of pull up a little bit and not have as crazy of stuff going on. On Friday, August 9th, we've got AMC Networks. That's really the only one, bigger one that we have. I thought I was getting a call, just a bunch of notifications. AMC is the only, kind of name worth mentioning there for Friday. Let's see. Data, some volatility watch, some IPOs. Yeah, nothing. We never really pay too much attention to IPOs there. What that stands for, it's probably overpriced. Now, let's check out the economic calendar for this week. So Monday, today, we get two pieces of data in the morning, 9:45 U.S. services PMI, right? And then 10 a.m. ISM services. Those are those pieces of data where, again, you get like a little pop quick, like 1 minute, right? 1 minute, 2 minute pop or drop. So if you see that, happening at 9:45 or 10, that's what it is, right? It's that data. Tuesday, nothing really. Wednesday, consumer credit. Thursday, initial jobless claims, right? That's going to be probably the biggest point of the week. So there's really not much happening except for today at 9:45 and 10, small things, right? And then Thursday, we've got the jobless claims. So the jobless claims are definitely going to be the most important out of the economic data drop this week, but a lot lighter of a week compared to last week, because last week there were 60 different balls in the air at once. And, it definitely tore a lot of people up, right? You're looking to some weeks thrive, other weeks survive. Last week was a week of survival, right? And we'll figure out what this week ends up being based off all this crazy news that we got coming in, right? So our top story here, if you guys, aren't plugged into international news, it's been market mayhem, quote unquote. Uh, thought last week was bad. Think again. There's some serious carnage out there, and the fallout is quickly spreading across the globe. Investors can really use some soothing words from central bankers right now, especially from a Fed that's being seen as falling behind the curve. Remember how things went for markets in 2022? So, a disappointing jobs report on Friday indicated that Powell and Co. should have likely cut rates at their July gathering last week, and sentiment has quickly shifted from a soft to a hard landing or even an emergency landing. So, flashing red, Monday's bloodbath started in Japan, where the Nikkei 225 index, remember, Japan's ahead, so it's Monday is come and gone for them. So, the bloodbath for today around the world started in Japan, where their Nikkei index plunged 13.2% for its worst session since the 2011 Fukushima nuclear meltdown. So, not a good day in Japan. Adding to the concerns were the BOJ, Bank of Japan's steps toward policy normalization, and it has translated into Japan's world beating rally this year, entering a bear market. Circuit breakers were also activated for South Korea's Kospi after the index rapidly dropped 8%, while Australia's ASX 200 slid nearly 4% for its worst session since June of 2022. So we've got this domino effect of selling just cascading across the world in terms of markets. And it's honestly a lot of it based off of more news. So some of it, yeah, but news on an attack, right? An impending attack on Israel, apparently from Iran, has markets all around the globe spooked. And whenever markets are spooked, what happens, right? Typically, equities will drop, stocks will go down because people will flee and put their money in safe haven assets like gold, right? So that's something gold and silver that probably moves positively as a result of this. It's important to be able to check the chart to see, okay, exactly what happened, right? Is there opportunity that's backing up the fundamental thought process of why this works? I was kind of looking at them checking back in on Friday, and silver had gotten some volume, and that made me kind of stop and look and think. I said, oh, okay, well, I'll keep an eye on it. And now this all made sense, right? When this started taking off around the globe, there's always somebody, right, who has a tip or who knows something, and so we'll likely see a push up in gold and silver as a result of this. But you got to know how to read those charts to make sure you're getting in the right spot and you're not buying the top, right, and just hoping for the best, because that's how a lot of people destroy their ports. Major market indices also tumbled in Europe and over in the U.S. Traders are also set to open the week by pressing the panic button. The S&P 500 futures are off by more than 3% at the time of writing. So the time of this going out, which was an hour ago, right? So we've got red cascading here across markets. Let's see here. While contracts linked to the Nasdaq are down by a whopping 5%. So we've got the S&P down 3%, pre-market Nasdaq down, right? Q's down 5%. The index already fell into correction territory last week following an overheated AI rally and headline making news from Warren Buffett. See below has not helped the situation for tech stocks. Safe havens like gold and Bitcoin are also failing to catch a bid as the sell everything mentality takes hold and no one appears willing to catch a falling knife just yet. That's interesting, right? Bitcoin I saw have been selling and really, really sold over the weekend. But I wonder what gold's chart is looking like. I haven't taken a look at it, but I'll peek in and see. But yeah, if you just gotta sell everything type, then this is this could get spicy. So that's not all. Rising geopolitical tensions aren't making the investing landscape any better, with President Biden meeting with his national security team in the Situation Room ahead of an anticipated Iranian attack against Israel. It could also include a coordinated front with Hezbollah in Lebanon and or the Houthis in Yemen, and a serious escalation that could begin as early as Monday. Fears of a regional conflict have prompted the U.S. to deploy additional military might in the Middle East, including a carrier strike group as well as a new squadron of fighter aircraft. So, what do we have again? More black swan events, more things that you cannot control happening over the weekend, right? All this again is the stuff that you have to recognize. Okay, what can I control? What can I not control? What can I control? What can I not control? And then you move from there. If you have no idea that an Iranian attack is being planned, in Israel, then you would have had no idea about how you should, kind of conduct yourself heading into this week. And this crazy news, again, completely changes things. It completely changes things. So you have to take time to say, okay, I let the market digest this. What does this mean? Okay, now I have a new path forward. Okay, wait, a new event happened. How is the market responding to this? Okay, now that I'm on par with the market, let's execute and move forward, right? You've got to understand what's happening before you just jump in and start doing things. Yeah, we could get, continued selling here this morning, or we could open up and bounce because we've already sold significantly over the weekend, right? So don't, come into the day and say, okay, well, I know that, if I get calls when I expect the stock to go up and I get puts when I expect it to go down. Well, everybody else went down, so I expect us to continue to drop. You have no idea, right? Nasdaq opened down 5%. Australia's ASX only slid 4%, right? So it's like Japan went down 13%, but South Korea down 8, Australia down 4. So there's no guarantee that we continue to sell from where we are now, especially given the selling that we got last week. So it's definitely going to be a wait and see approach, right? Reflect on the charts, and make sure that you are kind of aware of what opportunities will result because of this. Is this something where it's like, oh no, the market is done, we're cooked, we're dead? Absolutely not, right? But people don't like uncertainty. And that's what this market is pricing in right now, is the fact that, okay, there might be a major attack that's coming. There's a lot to digest. So, seeking out the commentary with the next Fed gathering over 6 weeks away, a recent call from investing group leader David Lerner may not be looking all that contrarian. Quote, cutting rates in August is less disruptive and adds to the Fed's credibility, he explained, saying that an intermeeting reduction of 25 basis points would counteract faltering employment and can prevent an immediate 50 basis point cut or even 75. This will, of course, royal stocks, which the Fed officially doesn't care about in parentheses, but really does. So yeah, we'll see. If they do an impromptu cut, that would be crazy. Markets would definitely welcome it. People are now pricing in multiple 50 basis point cuts, right? Not just one, but multiple this year, given the weakness that we saw in the employment sector. So we'll see. Powell's definitely in the hot seat, though. We're going to see what he's made of. Financials, cash is king. Warren Buffett's Berkshire Hathaway has slashed its gigantic stake in Apple by nearly half, sending the iPhone maker shares plunging over 7% in pre-market trading. So we've just got so much happening. There might be an attack going on in Israel. Warren Buffett and Berkshire have slashed their holdings in Apple, right? It's like there's one thing after the next, one thing after the next. And remember, has anybody lived through this before? If you have, raise your hand. Nobody, right? No hands raised. No one has lived through this before. So you need to take that time to understand what's happening and then deduce, okay, what's the best course of action from here? And it's not easy, right? It's not easy. But that's why patience is super, super key. You're not Raven from That's So Raven, right? You can't see into the future and know that this is going to happen. Don't chase. Gather yourself, right? Gather yourself, steal yourself. Um, and figure out what the next move is. But yeah, this is, I mean, just news after news after news. The latest move translates into the investment firm dumping 55.8% of its Apple holdings in 2024, leaving it with a stake worth 84.2 billion at the end of June. At Berkshire's annual meeting in May, the Oracle of Omaha still expressed confidence that Apple would most likely remain the company's largest stake at the end of the year. To note, Buffett has also been trimming his stake in Bank of America in recent weeks. Makes sense. Bank of America had an amazing run. We trimmed at the same time. Great trade. M&A news, merger Monday. Mars, whose candy brands include M&Ms and Snickers, is reportedly in advanced discussions to acquire Kellanova, whose ticker is K, which makes snacks such as Cheez-Its, Pop-Tarts, and Pringles. Assuming a typical M&A premium, Kellanova, which has a market cap of about 22 billion, may be valued at around 30 billion. Kellanova was spun off of Kellogg last year in a deal that gave it popular snacks and frozen breakfast foods such as Morningstar Farms and Eggo, as well as an international cereal division. The company reported Q2 earnings on Thursday that topped estimates and sent shares up 7%. So good news for Kellanova, right? We'll see if this goes through. I don't think it will, right? At least under this administration, there's like none of these merger and acquisition deals to go through. So I'm not really, concerned about that news. Moving to Texas, Chevron, ticker CVX shares just turned negative for the year after the company posted Q2 adjusted earnings that missed expectations, which was largely blamed on weaker refining margins and refinery maintenance. But generating the most buzz was Chevron's decision to move its headquarters to Houston from California, where it's been located for more than 140 years. Quote, this isn't a move about politics, said CEO Mike Wirth. We believe California has a number of policies that raise costs, that hurt consumers, that discourage investment. It's a move that's about what's good for our company to compete and perform. So, CEO Mike Wirth and Chevron picking up and moving headquarters along with Elon Musk and a number of other people out of California. In terms of today's markets, just bloody all around the world, baby. In Asia, Japan down 12.4%. Crazy circuit breaker type day. Hong Kong down 1.5, China down 1.5, India down 2.7. The footy in London down 2.5, Paris down 2.2, Frankfurt down 2.6, the Dow down 2%, S&P down almost 3%, basically NASDAQ down a little over 4%, crude down 1.6, gold down 1%, Bitcoin down 15.3% to 51,461. Sheesh. What else is happening? Tropical storm Debbie turns toward Florida. Record-setting rain looms. Viking obesity drug could directly rival Lilly's Zepbound. So Viking is VKTX. Blame game. CrowdStrike hits back at Delta over litigation threat. Over 50 U.S. lawmakers, 21 states back DOJ defense and TikTok ban. Ukraine deploys F-16s. Zelensky hails new chapter for Air Force. Maui wildfire, Hawaii Electric, and others reach $4 billion settlement. Some CVS stores run out of COVID tests as cases spike. Report U.S. eyes barring Chinese tech and autonomous vehicles. Bed Bath & Beyond sues GameStop CEO Ryan Cohen. Musk says Fed has been foolish for not cutting interest rates yet. So, Elon's going to get his 2 cents in there. Let's see here. I started to post about it last night. Yeah, look, craziness. A lot of craziness going on. But look, that wraps it up this morning, this fine Monday on August 5th, 2024. If you are not out here actively putting your money to work for your markets, make sure that you learn, right? Send me an email with a subject line trade, and we can get to it. But at this point in 2024, as just a responsible adult human, you've got a dual mandate, just like the Fed, right? The Fed has two jobs: maintain full employment, keep inflation near 2%. We as humans living in 2024 have two jobs, right? Making sure that we are counteracting the rampant inflation that we have no control over by putting our money to work for us in markets is number one, right? Number two is making sure that you learn AI, utilize it, apply it to increase the value that you bring in both your personal and professional lives. If you do both of those, you do not end up an extinct fossil of the past, right? That will end up just being the fossil fuel that burns in the engine, right? From the system of someone that did adopt those things and did move with the times, right? So make sure that you're malleable, you're driven, you're consistent, because consistency beats talent when talent isn't consistent, and you look to get 1% better each and every day, right? So if you aren't trading with us and you want to, email me, adam@adamhollandeducates.com, subject line trade. Other than that, let's make it a great week. Let's navigate markets. Let's continue to crush it. And I'll see you guys back here tomorrow morning for our next session. Have a good one.